Welcome on board Dipan Mehta as well. Dipan, hi, morning. You've been an old timer. Give us your thoughts. Time and again, the exchanges have wanted to extend market hours. You're for or against that?
Good morning and thank you for having me on your show. I may be in the minority, but I'm against extension of trading hours. And apart from the challenges that brokers are facing in terms of delays in files coming from the exchanges and the kind of processing which has to take place at the back office software, and mind you, volumes have gone up multiple times. And I'm not sure that our back office and front office applications have been geared up as well. And the other aspect is, I think, distortion in the price also on the next day in the opening as well, because if you have index which is down by 200-300 points in the evening, then next day morning that will set the tone for the market, and that will set the sentiment for the market. So even if things are not as bad, just because you had an index, which was down by 2-3% or so, automatically the cash market also will take the cue from there and start trading lower. So there's going to be an issue as far as price risk also is concerned. So all these things have not been completely examined. And last I heard that even SEBI chairperson was not in favor of extension of hours. So I guess the ANMI suggestion is more of a recommendation, and eventually the decision lies with SEBI.
Dipan, just to put it on the table, that exchange stocks and a lot of market infrastructure, stocks that should be in focus, that now we are going in that direction, and these guys will be beneficiary of higher volumes in the market. But I was quite surprised, Dipan, because till 2 months back, a few months back, it was the entire broker infrastructure and ecosystem which were resisting, saying that the costs will rise higher in proportion to the incomes or the higher volume on brokerage front, and hence did not make sense. But now, of course, it appears to be going in that direction. What kind of market-related infrastructure stocks you have in your portfolio? Do you have any exposure to any of the exchanges, CDSLs of the world, broking stocks?
No, I don't think we have any exposure to the market infrastructure stocks. Maybe we have missed them because, in terms of being in the industry, we just felt investing in our business was good enough as a proxy to higher trading volumes. But we have positions in wealth managers like 360 ONE, although the performance has been stagnating past couple of quarters, but the entire sector has done well, right from 360 ONE, Anand Rathi Wealth, and even Nuvama Wealth. They all have done well, and this time around, I think I have seen very impressive numbers coming from asset management companies also, like HDFC Asset Management, Nippon, Aditya Birla Capital as well. So from that point of view, rising stock market certainly has given a fillip to these companies. And I think that if you compare the wealth managers, the mutual fund asset managers, in terms of valuations and in terms of risk return profile, they offer a far better investment choice than the exchanges, because exchanges are subject to a lot of volatility in their earnings, which may not be the case for wealth managers, where annuity incomes are steadily rising.
Fair point. Dipan, but there's a roaring bull market, not just in the small and mid caps, which continues to be the case. But look what's happening in the oil and gas pack, the comeback that IT is making. Anything that you're spotting here in terms of a trend?
See, I think that there is a lot of liquidity coming in the market, and investors are looking for stocks where they see some potential for appreciation. Software was not so bad earning season, so money is being diverted over there. PSUs, by and large, I think were extremely attractive, so we are seeing a PE re-rating taking place over there. But by and large, there are a lot of challenges in large portions of the stock market, be it specialty chemicals, agrochemicals, even consumer-oriented stocks, right from FMCG to retail. I think they have certainly been impacted, by slowdown which we are seeing. And whatever from the face of it, whatever I've seen so far is that the top line has been muted for many companies, and growth in earnings and bottom line have come through from lower material costs, and that's because of base effect. But low material costs it's not such a great earning season per se, and I suspect that March quarter also may be a bit challenging. So I think if earnings are not coming up to investors' expectations and expectations are reflected in P multiples, then it's time to get a bit cautious and maybe just try and trim the portfolio. Of course, medium term, long term bull market sentiment and fundamentals remain intact, but I think we have a couple of quarters of challenges.
Dipan, did you manage to have a look at the numbers for Pratap Snacks? Completely bombed out, kind of a chakna company, but the numbers seem to be suggesting that they are rebounding. Margins expanded, top line growth is pretty okay. Stock is way lower than where it used to be, 2400 odd at their peak. But BKG manages to get 6 times sales. This one is at 1 time sales. Have you seen this category on this or this stock in particular?
Yeah, I think we had studied it. The question is for me, right?
Yes, Deepan, the question is for you.
Okay. No, we had studied it, but the earnings, the volatility was significant. And end of the day, I think did not shape up to investors' expectation. On the other hand, Bikaji being a new listing has demonstrated better numbers quarter on quarter, and investors feel that there is perhaps more potential over there. But by and large, I think on the FMCG side, one needs to be a bit careful. Impressive numbers from Varun Beverages and the way they are growing that business. I think that's amongst the top picks when it comes to FMCG. But such food companies, especially single product food companies, one needs to be a bit cautious because you could have a minor 2 3 month or 2 3 quarter slowdown in sales for whatever reason, consumer demand or weather patterns, distribution bottlenecks. And from that point of view, I think whether it's Bikaji or Pratap Snacks, they are reasonably valued. And I don't think that, oh, long term, of course, is great, but short, medium term, I'm not so sure of the prospects.
Right. Okay, we're indicating a 0.5% uptick start, but I think today is going to be a lot more about individual stock-specific movers and a plethora of mid and small cap companies which have come out with their earnings. And one which really stands out is Lemon Tree. Look at the numbers there. The profits have fallen about 10% and there's a margin dip as well. While it may look robust on paper, 48.5 thereabouts, but in comparison to the same quarter last year, which was about 54.2%, that's definitely a dip coming in from Lemon Tree. Dipan, it's quite curious a case, right? I mean, it's traditionally the strongest of quarters, wedding season, year end, what have you, and the performance hasn't quite matched up in such a booming sector.
I think you can attribute that to the base effect also. Last December quarter for all hotel companies was exceptionally good. They were in the midst of a rebound travel post COVID, but that kind of tailwind is not there at this point of time. But nonetheless, I think numbers are decent. They're expanding their capacity and travel tourism. That sector seems to be holding up pretty well, if you ask me.
Skirting around some energy space closely, the buoyancy that you're seeing in the entire OMC pack on an OMGC, Petronet yesterday, Qatar Energy extended that key LNG supply deal all the way into 20 years, beyond 2028 now. What are you making of the leaps that the energy sector in India is making, going beyond Reliance, so to speak, and the kind of cheap valuations these stocks are still trading at?
See, I think that oil marketing companies and GAIL, we are seeing a multi-decade adjustment in their valuation at this point of time. Generally, the overall expectation is that because of low oil prices, there's a great deal of flexibility when it comes to pricing, and therefore marketing margins will steady or remain or may even go up for these oil marketing companies. That is point number one. Secondly, I think a lot of the expansion plans, especially BPHP in terms of refining capacity, is going on stream, and instantly that will add to the bottom line of the company because that much less traded volumes will take place and refining margins still remain pretty much strong. And some of this is brownfield expansion, so it will improve the productivity of the existing asset and improve return ratios. And in a market like this, where every industry, every company, or the most investment grade companies are quoting at very, very rich PE multiples. Investors want to deploy their cash in the market. The only low PE, low valuation segment is the oil marketing companies, and we are seeing a lot of money being poured over there. I think this trend will continue for some more time. Oil marketing companies can have a further trading rally even from these levels. But these are not great long-term investment stocks, as we have seen. Their performance is extremely patchy, and if oil prices start to move up, then these companies' profitability will certainly come under stress. So while there are great trading opportunities, I'm not sure I can look to buying HP, BPO, Indian Oil on a 3-5 year investment horizon.
And great to have you on the show as always. Good chatting with you. Let me quickly get in